What is going on, investors? Hopefully you guys are doing well out there. That's right. We're back again with more earnings reports videos. Today, we're going to talk about Bank of America Corporation, which reported their Q1 earnings this morning. We're looking at ticker symbol BAC here. We'll run through the numbers. We'll take a look at their different financial divisions. We'll take a look at the profit. We'll take a look at the income. We'll take a look at all that stuff. And then we'll get over to the stock chart as well. This one's pulling back a little bit today. We'll talk about if there's some zones this one pulls back into, because it could potentially be a buying opportunity. Now, year to date, this stock has been ripping up 31%. We got a 1.81% yield on this one, but guess what? Bank of America telegraphed that they will be increasing that dividend at some point. Now, they did announce a $25 billion buyback plan, so that's nice. It looks like they will do that over a period of time. They didn't really give a set period. They also authorized repurchases of shares when they have equity-based compensation plans. So imagine how cool that is. You're an executive of a big bank. You get paid with shares so you can sell those back into a buyback that the company pays for. That must be a pretty sweet gig. Now, here's the thing, though. Following these restrictions, so if you're not sure, the Federal Reserve is starting to ease some restrictions based on some capital requirements that these banks have. Now, Bank of America is extremely well capitalized. In fact, they have $35 billion in excess capital that the Federal Reserve is requiring them. So what they're going to be able to do is use some of that money for this buyback, but they also said following the expiration of the restrictions, the company expects to distribute additional capital to shareholders, likely through buybacks and dividends as well. I would expect a dividend hike on this stock at some point. Now, it could be priced in from investors to a certain degree over the last year, but a dividend hike nonetheless would be nice. Now, from the top line perspective and the bottom line perspective, it was a beat across the board. Let's jump into the numbers here now broadly. And we talked about this yesterday when we looked at JP Morgan and Wells Fargo and these other banks that you could potentially look at. Across the board, what seems to be going on with the consumer, our deposits are up 25% with Bank of America, but loans are actually down 8%. So we're actually seeing a deleveraging by consumers. So there's two ways that you can look at this. That's not necessarily a good trend for banks like Bank of America that rely on consumers taking loans. Now, it could be a tailwind at some point, because at some point consumers are going to potentially run through these deposits and then have to take out new loans, or because they feel financially secure because they have a lot of money in the bank, they go out and buy a new car. They go take out a new credit card, or they take a vacation and put that on credit or something like that. That could be a tailwind for these banks. Now, we're taking a look at their consumer banking. Bank of America has 3 or 4 different divisions. We'll take a look broadly at them all. We'll take a finer grain look at the consumer banking side. So we've got, since it is the largest of their business models. So we've got total revenue here. We're seeing that this total revenue is actually going down. Okay, so we've got a year over year view, and this is quarter over quarter. These two columns, we see in both cases revenue is going down. We're at $1 billion, and it was higher 3 months ago, and it was even higher a year ago, despite what was going on and kind of launching itself here in the United States and across the world a year ago. Now, what is completely different this year is this provisions for credit losses. So as you recall, these banks last year were setting aside major amounts of money. Okay, the pandemic was just coming on shore here in the United States. They weren't sure what the heck was going to go on. Okay, and so they were starting to put aside money because they weren't sure if credit cards would start getting defaulted on, home loans, car loans, all those types of things might get defaulted on. Banks, by rule and really out of good practice, set aside money to cover those loan losses. They set aside $2.2 billion last year. And you see just in the last quarter that we had, they barely set aside any money. And guess what happened this quarter? They actually released that money back into the company. And so when you see parentheses like that, it usually means a negative number. In this case, it's actually a positive. It means that this money is coming back into the company. We'll see here in a minute how that impacted net income as well. So we've got some non-interest expenses. This is all expenses related to anything other than interest. And you actually see, even though we have revenues declining, interest expense is actually rising, but not too bad. We've got some pre-tax income here. We actually see that despite declining revenues, our pre-tax revenue is actually up, partly or almost mostly due to the fact that we didn't provide credit losses. We actually got that money back. And so that helped pre-tax income, and that obviously helped net income because we had expenses rise, revenue decline, but because of this provision for credit losses got better, net income increased tremendously. Again, this is not necessarily a one-time thing, but it is not something that necessarily will recur year after year because you don't typically have these big, gigantic kind of provisions and then take them back. That is not something that is standard in the banking industry. It's something that happens only in extraordinary events like we've had over the last year. So this is not necessarily something that I would expect to recur, but take a look. Our net income is actually up in here. Now, let's take a look broadly at the consumer. We see average deposits here up to $924. Again, that's pretty far above over last quarter and way above where we were over the last year. So we're seeing big time increases there. And here's our average loans and leases. We're seeing that is just consistently declining over the last year. So again, you can look at this two different ways that could potentially be a tailwind for a business like Bank of America in the future. Once loans and leases start to pick up, they also have quite a bit of average deposits here to borrow against as well. You also have interest rates that have just been ripping higher over the last 6 months or so. Although we've seen them pull back here recently, it's interesting because interest rates have been ripping higher. That also could be a reason why consumers are willing to borrow less, because the cost to borrow just continues to go up. You also see here average credit card outstanding balance. That is also ticking down as well. Again, that's a positive in some cases, but for a business like Bank of America, you'd actually like to see people use their credit, especially when balances are up. Now, here's the global wealth and investment management business. This has been a very steady business. And so I like to see this with Bank of America. You get obviously a big window into the consumer, big revenue there, but you get the steadiness of this wealth management and investment business. Take a look. Revenues basically flat, basically steady across the board, essentially up just slightly over the last year. You take a look at net income here. That is just steadily in this $800 million range. Okay, we've got average deposits, that up. Now we take a look at this side of the business. Loans are actually up and flat quarter over quarter. So this is a very steady business. So even though the consumer is kind of fickle, and we know this just based on our own kind of actions, the consumer can be fickle. They can keep more money in the bank. They can decide to put a bunch of stuff on a credit card or a loan, whereas businesses tend to be a little bit more steady. You get a nice little bit of that. Now here's global banking as well. Seeing a similar type thing here, at least on this top line here. Top line staying really steady. We had this big, gigantic provision for credit losses. This got flowed back into the balance sheet. That really helped our net income here. Okay, take a look at last year. This time we only made, I say only, but $138 million here. Okay, that is because we had to set aside $2.1 billion for credit losses. Now we released $1.1 billion of that into here, and we ended up netting out $2.1 billion. That's way over what we did in the last quarter. So you had big impacts on the balance sheet here as well. You got average deposits up quite a bit, but average loans and leases also down. Again, could be considered a tailwind heading into the next quarters. Now, global markets exploded. Nice, big, gigantic jump, especially over the last 3-month quarter that we had, but also year over year, big, gigantic jump here as well. Net income also jumping up quite a bit as well, at least in these global markets. So that's kind of a high level view of Bank of America. Let's jump over to the stock chart. Let's see what's going on. This stock is pulling back nicely today. It's actually down about 3%. So despite the news of a buyback, which I think was probably priced into the stock a little bit, the news of potentially more dividends, more shareholder friendly stuff priced into the stock a little bit, we are seeing a little bit of a pullback here. Now, it obviously is clear that sellers stepped in here right at $40, almost on the nose. Now, the stock kind of wicked through it a little bit, but $40 on the nose is seen as kind of a resistance point on this one. We're sitting right here at about $38 and call it about 60 cents on this one. I see some logical areas of pullback right here at about 30. We'll call that 30. We'll round it up to about $37, but that's not necessarily the number right on the spot. We've got this moving average that has just steadily been climbing. That will converge with this area. Notice that it was an area of support here. I'm talking about the $37 level. It was an area of support here. It was an area of resistance here. And so I like it when two areas like that converge with another indicator, in this case, this moving average here. So when these two touch, it should create some support underneath the stock. Now, if it doesn't, man, if it breaks through this area, I tell you what, buyers have completely dried up. This thing could pull back, pretty significantly at that point. Wouldn't necessarily anticipate this, but we're really only about $1.50 off of this point. And this is where I could potentially see adding shares of Bank of America. Now, I'm overweight personally, Bank of America. Whether or not I do it at that level, something I'd have to evaluate if and when we get to that point. But I do like this stock. Now, from a longer term perspective, look, the trend is up. I know we've just looked at kind of a tighter time frame, but take a look at this stock chart. Holy moly, this stock has been locked in an uptrend really since the beginning of the year. And we had a low here, a higher low, and we're still in an uptrend here. This is a higher low. Wouldn't surprise me, honestly, if you have something like this happen, okay, where we do find some support up here and this one consolidates and then moves higher. Now, what we're really looking for this trend to continue, this is obviously a really steep uptrend. Wouldn't mind seeing it consolidate sideways, but at some point you're going to have to break above this $40 level and you're going to want to see it on a big green candle. You're going to want to see a green candle above 40 and maybe follow up the next day with another green day. Then that would signal to me the $40 level is an area of support. So if you were to have a pullback back to 40, that could create a buying opportunity as well. That's if this stock reverses and goes higher. Not necessarily sure what's going to happen with this one, but I think the shareholder friendly stuff that's going to happen with this buyback $25 billion in buyback is quite a bit. We just ran through their net income in a quarter, and $25 billion is a lot. Okay. And, again, more shareholder friendly stuff like increasing dividends. Obviously the Federal Reserve has kind of tampered that with all the banks, but Bank of America is very well capitalized and in a very good position. My opinion, could you trade Bank of America? Sure. If you want to get in here and trade this, do option stuff, knock yourself out. My opinion, this is a buy and hold investment because you do have this capital appreciation that does happen, especially when you see interest rates rise, but you also have just dividend and buyback over a long period of time that can be very beneficial to a shareholder especially. So hopefully you guys enjoyed this one. That was Bank of America. Maybe consider hitting that like button if you enjoyed this video. We'll see you again soon. Good luck with your investments.